Good afternoon, it's Adil Fazal here, market analyst at CFDs.com, bringing you a review of the European markets for trading session the Monday 29th of January 2018. Please be sure to visit TradeSignal. Signals and market updates from leading providers at www.tradesignal.com, and you can certainly download the app at the Google Play and the Apple App Store. Okay, so let's see exactly where this market's positioned in terms of stats then, folks. First and foremost, as always, in terms of the Asian markets overnight, you have the Chinese markets certainly higher. On the back of obviously stronger US equities, you have the Dow and the Nasdaq and the S&P all screaming to new highs. Although the Dow Transports and the Russell 2000 certainly is lagging, so bear that in mind. So the S&P broke above 2870, which was quite impressive. I mean, just bring up the chart here, very, very impressive. The Dow, as you can see, broke above 26,600. S&P 500 as well, certainly pushing higher. So again, very, very impressive move, as you can see here, breaking above that 2870 zone in the daily chart. S&P 500 certainly very, very bullish there. Okay, so again, one would have expected the strength obviously to feed through into European markets. That hasn't been the case, and there's a number of factors there. Number one, Mr. Trump certainly raising concerns, given the fact that he said that he's hinting at retaliation with regards to EU trade. Okay, so again, hinting at retaliation. Also, Mr. Trump obviously has stopped the potential 5G rollout, okay, to Chinese firms, or giving any access to 5G firms by potentially nationalizing it. So again, that certainly raises potential concerns with regards to a trade war versus China, which is effectively negative. We did get weaker GDP numbers out on Friday, but yet the markets totally ignore that altogether, and S&P, Nasdaq rallied to new highs. Now, it has been interesting in terms of viewing the equities or futures markets overnight, given the fact that the Nasdaq actually ripped and broke higher above 7,000, all the way up to 7,040, then reversed back down below 7,000. So you're having a 40 or 50 point variance move in the Nasdaq at the moment. So it's kind of interesting. Okay, again, you'd expect the follow through in terms of European markets to go through, given the fact that Asian markets are higher, given the fact that obviously US markets are higher. It's just the Nikkei that was more or less closed flat. Shanghai closed higher, but the Hang Seng certainly closed weaker. Now, reviewing the Asian indices, I think this is quite important in terms of the next potential move going forward. Now, the daily chart, as you can see, of the Shanghai index here, you can see here closing down. You've got a bearish, obviously, engulfing candle. So again, certainly something to consider as well. Okay, now looking at the weekly chart, you can see that we are now coming into turbulence. So again, Shanghai index certainly indicating potential weakness. So again, watch out there. In terms of the iShares World Index Fund, if I go to a weekly chart, you can see it's ripping higher. World Index indices certainly moving higher. I just wanted to give you an insight into the emerging markets. Let's see if I can bring that up for you. 1 second. Oh, I got the emerging markets saved here. No, let me just bring up the EM. Usually the EM, I have been told. Okay, let's just bring this up. Okay, no, that's not the one. Bear with me. Okay, I'll bring up a monthly chart. Okay, so monthly chart is certainly coming into resistance, as you can see, in terms of emerging markets. So emerging markets coming into resistance. Okay, the Shanghai or Chinese indices certainly coming into resistance as well. Also in terms of Nikkei. Let's bring up the Nikkei, bear with me. There we go. Okay, so Nikkei as well, lackluster as well, so indicating weakness. So Asian markets to a large extent now are coming into resistance, emerging markets into resistance, and that basically is leading me to conclude that we are now looking for a potential reversal, especially with US equities. I mean, if US equities fail to continue their run higher, especially the Nasdaq failing to hold above 7,000, if the S&P has already reversed from a pivot high of 2877, it's reversed quite sharply on the back of oil prices obviously moving lower on the back of supply concerns, and copper certainly is under pressure as well. The Chinese and the Hong Kong indices both obviously were slightly weaker towards the close. So again, they did move higher, but then they gave up those gains. So again, that certainly is a cause for concern in terms of markets. It shows that US equities, or should we say European equities, are failing to follow through as well, on the back of Mr. Prayat's moves as well in terms of QE, talking up QE there as well. So bear that in mind. That's another factor to take into account. Okay, so number one, in terms of European indices, you've got concerns with regards to end of QE. You've got concerns with regards to the trade war with the US. So those two factors certainly weighing on the sentiment as well. Okay, in terms of the other factors as well, concerns over Brexit from the UK going forward with regards to Theresa May. There's a legislation that's going through to the House of the upper house, which again undermines her ability and certainly does cast doubt on her support level as well going forward. In terms of Trump trade war, concerns with regards to EU, ECB prior. The other thing that I missed out, UK risks higher energy prices via Brexit, and German import prices certainly rising as well. So again, all those factors adding together, from my perspective, adding trade war versus China, concerns with regards to protectionism, all indicate risk off. Okay, now let's look at the actual technical picture. Now let's start off with the German DAX first and foremost. Okay, so German DAX at the moment holding potential support here. Again, it's screaming to close that gap below. Again, bear in mind you've got concerns with regards to trade protectionism via Trump. You've got concerns with regards to hawkish comments. Again, that certainly is going to certainly is expected to weigh on the German DAX going forward. So bear that in mind as well. Looking at 10-minute chart, we've bounced off that key support below at 12,275. Let's see if that can hold. Okay. In terms of the French CAC, let's bring up the French CAC. Again, this is something that I've been looking at in terms of the H&S formation, bearish potential setup here, looking to potentially flush down to gap fill at 5480. So again, the fundamental catalyst certainly is there. Trade protectionism, hawkish ECB. Those two factors certainly expected to weigh, and given the fact that this failed to follow through in terms of US equities higher, that's again is a negative factor. So again, take that into account. In terms of the FTSE 100, we flushed lower down to 7665. We've held that previous resistance equal support 7660 zone. We've pushed back up to gap double top. So again, that's an impressive thrust. You have to respect that for now. 7665 was a good profit taking zone. I should have taken that profit, but again, it's always hindsight, foresight. We could certainly move lower here, expecting 7645, and then ideally, ultimately expecting 7615 gap fill to be closed below. So those two factors I'm certainly expecting going forward. Okay, so bear that in mind. In terms of the 60-minute chart on the FTSE 100, we're certainly holding that key resistance zone around the fib 50%. Previous support equals resistance, and we're making lower lows and lower highs. Now the daily chart obviously has bounced off 7600. Okay, but we are now facing turbulence where previous support equals resistance, and you got that fib 50% retracement. So lower lows, lower highs, back down below 7600. That's what I'm expecting, especially the ongoing concerns with regards to Brexit, with regards to political uncertainty given Theresa May's predicament, with regards to the fraud, corruption scandal via Carillion, etc., etc. I mean, there are a lot of variables now that's forcing the FTSE 100 lower, so certainly take that into account. Okay, in terms of Euro stocks, itself, let's just quickly go to the daily chart. First of all, give you a bird's eye view. Ever since we rejected that gap level, we've certainly obviously been bearish. 60-minute chart, it's just lower highs and lower lows. Now the question is, do we go back and test that 3615 and 3605? That's the question. Okay, so let's see how the market transpires here. 10-minute chart as well, looking for weakness. Okay, so again, take that into consideration too. Okay, so that's basically the status quo, okay, in terms of where the market stands at present. Let's see how the market unfolds. My bias certainly remains bearish here now, given the fact that we've had Asian markets reverse holding resistance. European markets have failed to follow through in terms of US equities to push into new highs. US equities are giving up a majority of their gains overnight. Okay, so it certainly is looking like a potential reversal day, especially given the fact that US markets certainly rallied on Friday, and European markets have failed to follow through. So again, looking for risk off to dominate now, looking for a potential move lower. Please ensure that you certainly download the app at Trade Signal and certainly take advantage of that bonus. Goodbye now.